Evergrande crash. Hello everyone and welcome back to my new video. You are watching Motivated Investing and now let's get in this video. Evergrande Real Estate, or Hengda Group in Chinese, owns more than 1,300 building projects in more than 280 cities across China. Founded by the former Chinese steel executive Zhu Jiayan in southern China in 1996, it is now China's second biggest property developer by sales. Its businesses range from property development to wealth management. It's also a familiar name to Chinese football fans as it owns the country's biggest team, Guangzhou FC. The booming business, which has tapped into many sectors of a growing Chinese economy, has also made Zhu one of the richest members of China's business elites. According to Forbes magazine, Zhu has a personal fortune of around $10.6 billion. 6 months ago, investors panicked when the container ship Evergrande got stuck in the Suez Canal, clogging global energy markets and international trade. Today, markets are fretting over a potential default by Evergrande, a highly indebted Chinese real estate behemoth, an event that some believe could set off a global financial panic. While the Evergrande fiasco was a mere blip en route to an otherwise stellar first 8 months of 2021 for markets, stocks have endured a rough September as fears grow that Evergrande's demise could cascade into a protracted debacle that might slow the world's second-largest economy. Add in the continuing gain in COVID-19 cases from Delta, higher inflation, and the Federal Reserve signaling it will buy fewer bonds in the months to come, and you begin to see why market participants have been shocked out of complacency. The question you need to ask yourself is whether the Evergrande experience will resemble Evergiven, quickly forgotten, or perhaps something more serious, such as the 1998 long-term capital management imbroglio, in which an overleveraged hedge fund was bailed out by the federal government to prevent enormous market turmoil if it failed to pay its debts. So far, experts believe it's the former. On a down market day, it's easy to look to the nearest headline like Evergrande and attach a cause and effect. But this market has experienced almost no downside volatility for a long time, and a pullback was long overdue, said David Bonson, Chief Investment Officer at the Bonson Group. Evergrande's collapsing bond prices have been forecasting its challenges for some time. What's going on with China's Evergrande? One thing's for sure, China Evergrande Group is in big trouble. The real estate giant, which also is active in electric automobiles, wealth management, theme parks, and even a soccer team, has already been unable to meet obligations on some of its nearly $90 billion in debt, along with another $300 billion in liabilities, causing it to restructure obligations with its creditors. This has understandably caused chaos and confusion in China since Evergrande is the nation's largest junk bond issuer. This crisis was precipitated by the Chinese government's decision to reduce the amount of debt companies could take on. This caused a capital crunch for Evergrande, forcing it to suspend construction of new apartment buildings and delay payments to suppliers. The firm's customers and business partners aren't happy. Folks who have handed over the equivalent of hundreds of thousands of dollars want their homes built, investors want their principal returned, and suppliers want to get paid. After all, if they don't receive what's owed by Evergrande, they can't pay their employees, who will then not be able to meet their own financial obligations. If you lived through the 2007 housing crash, this might all sound familiar and terrifying. A hot housing market goes pop, bringing down overleveraged conglomerates who don't have enough cash to pay their debtors, thus causing a financial panic to spread. And so far, it doesn't appear as if the Chinese government is eager to step in. In fact, recent reports suggest China may be willing to let Evergrande fail. Given its history, though, be prepared for anything. China's market is opaque and unpredictable, and the stock market doesn't react well to those characteristics, which is one reason why sell-off was so dramatic, said George Ball, chairman of Houston-based investment firm Sanders Morris Harris. We know so little about China's economy and its inner workings. How the Evergrande crisis is punishing global stocks. Evergrande's problems have coincided with waning investor appetite for stocks. The S&P 500 fell 5.2% between September 2nd and 20, but Evergrande isn't the only source of stress. Economic indicators, for instance, have been going sideways recently. Employers added just 235,000 workers in August, well below market expectations. Retail sales have jumped around while consumer confidence dropped to a 6-month low. Rising inflation continues, and the Federal Reserve hinted it will soon announce that it will begin to buy fewer bonds. This so-called tapering, while not as important as raising interest rates, does signal that the Fed is inching away from its emergency policy of pumping in a lot of easy money to help the economy recover from COVID fallout. And then there's Washington. Not only is Congress debating a hotly contested $3.5 trillion social program bill, in addition to the $1 trillion infrastructure plan, but it'll soon need to raise the debt limit, lest the U.S. Treasury default on its debts. With Democrats fully in control of the nation's legislative and executive branches, Republicans are refusing to help. Should the economy slow, and absent fresh economic stimulus, one Morgan Stanley analyst warns that stocks could drop 20%. The anxiety over what may come is driving much of the pessimism. As of right now, I don't see any systemic risk for the global economy from the Evergrande situation. But there doesn't need to be any systemic risk in order for markets to be affected, because there isn't enough clarity on how Evergrande's challenges may affect the global economy, and that uncertainty is enough to spook markets, said Bonson. What you should do about Evergrande. So you should sell, right? Not so fast. As Bloomberg's Brian Chapetta pointed out, increased agita over falling stock prices and a potential market correction could motivate people to engage in more trading activity, which could help the bottom lines of the same investment banks who claim a bear market is nigh. Also, the recent turbulence appears stranger because thus far in 2021 stocks have steadily risen. After a relatively quiet summer where the path of least resistance for equities was steadily higher, it seems as though market participants are looking to fade this year's rally, said Brian Price, head of investment management at Commonwealth Financial Network. We are entering a period that has been historically choppy for the stock market, and it seems that 2021 is not going to be an exception, which is to say, the current dip feels worse because stocks have performed so well recently. But when it comes to investing, the occasional down market is all part of the bargain, and it's generally a good deal for long-term investors. While the period between 2019 and 2021 was filled with an avalanche of major news events, the Chinese-American trade war, a global pandemic, and unprecedented stimulus bills, stocks have performed remarkably well. The S&P 500 gained 29% in 2019, 16% in 2020, and 18% so far in 2021. In March it was Evergiven, now it's Evergrande, and who knows what fresh crisis will strike in the months to come. Investors, though, do well by reading and understanding the news, just not trading off it. What are the international implications? The short answer is, it's hard to tell. Nobody really foresaw the implications of the fall of Lehman Brothers more than a decade ago. Not everyone thinks so. A possible Evergrande default could be a significant drag on the property sector, said Barclays analysts in a note, but we think it is far from being China's Lehman moment. Jimmy Chang, the chief investment officer at Rockefeller Global Family Office, thinks the ripple effect could extend beyond China. He told CNBC if China were to have a serious economic issue because of China Evergrande, the rest of the global economy would have contagion from it. Foreign holders of Evergrande's dollar-denominated bonds, which total about $20 billion, wouldn't have much say in what happened and would therefore face a wipeout. Analysts say they would probably pursue their money in international courts. Advertisement. Markets were spooked on Monday with America's S&P falling 1.7% after Evergrande closed 10% down in Hong Kong, the lowest since May 2010. But the territory's Hang Seng Index recovered on Tuesday, closing up 0.5%, and the S&P has also regained lost ground. Will Evergrande collapse? The demise of the company is expected. If handled well, however, the process could inject momentum into Xi's reform of the Chinese economy. We think it is difficult for Evergrande to meet its liabilities, said Tao Wang, the chief China economist of UBS. Project delivery will be most important from a social stability point of view. Hence, home buyers and suppliers are most important among its stakeholders. We think a possible scenario is segregation of project companies from the group to ensure the asset value is materialized and the cash flow is used for project construction only. Whilst we expect a debt restructuring with a haircut will be needed, she added. How is the situation viewed in China? There's an expectation in China that Evergrande will not have the full backing of the government. The Global Times' editor, Hu Zijin, said last week that Evergrande should not bet on a government bailout on the assumption that it was too big to fail. But many Chinese households bought properties from the developer off plan. They may lose their deposits if the firm collapses. Football fans may be disappointed, too. As the Evergrande saga unfolds, Guangdong FC is also looking for government help. According to Bloomberg, the government in Guangdong is looking to take at least a 10% stake, and a state-owned company may step in to provide further assistance. Thank you for watching. Don't forget to subscribe to the channel. See you in the next video.